all the members. All right, welcome back. It's Day Trading Radio, and today's video, as I was just discussing live on the radio, because I'm incorporating the video into the radio. So it's a live session, but I'm also recording it. I think there's a lot of good information. What it's going to be really based on, it's going to be a series of videos. I'm going to try to do one a week. Whatever day, could be a random day, and what we're going to do is we're going to look back at the market from early in the morning. We could do it from 9:30. I was just discussing we should start maybe at 4 o'clock. And what we're going to do is we're going to zoom back on a 1 minute time frame, like we normally trade, go back to that time frame, and from that point on, tick by tick, look for HPS setups. And HPS setups, or high probability setups, are defined. They're playbook setups. These are patterns that play out more profitable, or, in a higher percentage of the time. It's very difficult to kind of explain, technical analysis. It doesn't have to be perfect. It's not going to be perfect. It's not an exact science. But you start to learn where the market reacts and why it's reacting, and what the algorithms are doing, what the black boxes are doing, how they're manipulating the market. And you start to put that together in your own mind, and you try to ride the coattails, Getting back to the video, as I restart that, basically I want to go back, use the HPS setup, playbook plays, and identify them, each and every one on the chart. We're looking back, we're back testing basically. And it's important to do this because we want to really, it's almost like going to batting practice. Even if you don't get out, as long as you go to batting practice and you, develop the sense of how to find these out, see which ones work better, the more you see, the better you're going to, it's going to perform. So, with that said, I'm going to start off this series with this one, and it's going to look back at today's markets and just kind of go back of all the opportunities you could have had if you applied some of the principles of the HPS methodology. So that's the basis of this right now. So it is that was Friday. Today was Monday, so we're going to go. To there we go, Monday morning. And like I said, you can start any time you want. I think that the important time frames of the day is that 3 o'clock, 3:30 time frame with European Open. Of course, our 9:30 open. Then we have our 9:50 reversal. Then we have our 2 o'clock turnaround, and sometimes a 2:20 reversal. And the 9:50. Do we mention the 9:50? I think I did. Anyway, the 9:50 reversal. So there's a lot of things that I look for on time frames. So if we do you happen to be in a good position where you're able to trade the overnight markets, you have an advantage because there's less and less noise out there. You usually see very clean setups going into 3 o'clock, 3:30. In this case, you could actually see a 4 o'clock, 4:30, 4:50 area set up here. I'm looking to see if it was a divergence. It was not. It was a trend line, though, as far as I could tell. Let me see if it was already attached to 2 spots. Yeah, it was this level and this level, or was it just this level? And then there was this level right there. And then, let's see. Then we tagged it again. All right, so basically that trend line as we go further on to the day. But I don't want to do that. I don't want to go jump ahead of myself. But I noticed why, I'm just putting that trend line in there at that point. Probably just putting it in there. It was very close to the 2 pivots before this. And basically, this is what we're going to do. We're going to go through, we're going to zoom in a little, get a good view of every little pivot area. And the pivot areas are probably going to be the level we want to pay attention to. The market, nice little rally up here. And again, as we come into 8 o'clock, I sit down at the desk here, and the next thing you know, I can start mapping out the market for everyone who's tuned in. And I think we did have a tradeometer right at 8:30 here, just about right at that point. At that point, it was very close to the highs. Looking back, in that time frame, the highs are higher than this. But in this, looking at this, you're coming from 445, a rally that's really went from 744. 68, that's over 20 points, getting up to, that's 25 points. That's an incredible rally. overnight, just between 4 o'clock and 8 o'clock. Well, it's a nice chunk of time too. And then we start to really get focused into the markets. A little bit more volume starts to pick up. Pre-market, 9:30 market opens. At this point, we're identifying each and every setup that we want to take. Going back on this video, the walkthrough, the map. I haven't thought of a great name yet. So if you can think of a good name for the series, I was thinking of a couple of things. A walk through the market, or the market roadmap for say October 15th. Market roadmap for October 15, 2018. That's probably what I'm going to do. Anyway, probably discussing this way too much. Am I breaking up? So we go back here, we start to identify, even if we identify them live or, like I said, on this walkthrough, what we're looking for is a trade. And I have videos out there on the criteria to take this is our number one setup. A divergence is the number one setup on the HPS, methodology. It is. And it's easy enough to identify, and it's easy enough to put a stop in. And whenever you have a divergence like that, you put your stop in right under the second stage low of the divergence, which is basically the lower low of a divergence. You put it right under it, tick under, whatever. Also understand, you have to realize you're working off a 1 minute time frame. So 1 minute time frame, meaning that if we get back into overbought, even though the price is up here, you have to consider, maybe it moves higher, but the odds are that how you're trading these little ebbs and flows, this is a great profit, especially in this market, because you went from 64 basically to 68, 4-point move. All you're looking for is a point to 2 points on these type of moves. You're getting a lot of volatility, a lot of extra range, a lot of overshoots. Typically maybe this move right here might give you a point. Now it's giving you 4 points because of the recent turmoil in the markets, and that volume still carrying over, and the volatility still increased and elevated. All right, great. So, that would have been a successful trade. I would count that as a successful trade. This one was hard to look back at. I looked back at this one back here and I said, what does a divergence consist of? Well, a sell side divergence is a higher high on the stock price and a lower high on the divergence, or on this oscillator, the stochastic oscillator. And the more oscillators that line up with a divergence, the better. That means if you have a divergence on the 60 period oscillator, that is a really good long-term, probably top in the market, a longer-term top in the market. Now, this is still not that long-term. This is really basically a 5-minute time frame. But I converted over to just on the 1 minute time frame, using, extending the length. All right. So we could look at that and know, like, the 5 minute now is getting oversold. We have a divergence. I took the trade here, actually. This was a trade that I took here. The one funny thing about it is I think I called the bottom and I took it off after a point. Which is, it's especially when you trade in live, sometimes it could be, just a little bit more nerve-wracking. Let me see if I could bring it up. Yeah. All right, that's where the entry was. Right there. And that was that's right here where you see right before I was showing you, I want to switch back over to the live show. That spot right there where it says the tradeometer is right here. That circle. That's where, I took that. And I think it was a tradeometer setup too. So it had everything going. That was what we call a high probability setup. That's ones you have to take. So I'm going to mark them down. So far, everyone has really worked out. Now, look at this. Here we have Here, what am I identifying? We had a rotation. I might find new ones that I haven't even really talked about during the market because we're looking at so much that, it's very hard to, that's one of the reasons I'm going to automate the tradeometer, is it's just sometimes so hard to be on top of everything while you're taking questions and discussing stocks and going over news and playing guy in the buffalo. Sometimes it's just too much. So, again, number one setup, the divergence. When we have it, you got to take it. Number two setup, I would say, is the 2020 flag. All right, and we'll show a picture of that soon. So here we have a rotation, a pop up to a trend line, rejection. Then we've got through it, and it starts to chop around here. Now, we had a tradeometer set up here, and I was seeing if we were starting to see that divergence, and it was showing a slight divergence, but a very slight. I mean, I was really pushing the envelope on this. I said, well, it can't get above that 80 on the second ramp. Looks like a divergence. And it held in there pretty good. And, one of the killers of these kind of algorithms and stuff are black boxes or buy programs. And this is a classic example of a buy program. There's probably no news or anything right here, but they're so in tune. Everyone, there's computers out there that analyze everything. They know where stops are. They know where certain things are, and they know how to trigger certain things. And when you get a setup like that, lots of times you'll see a spike in volume, a big pop through it, and then it'll return, and it'll just fail miserably. But it took, this eventually would have worked out, except, buy program came in. They knew a lot of people probably were short here. They popped it. Took out some levels, previous close, suckered some people in, and then right back down. Then we had a beautiful divergence here. And this was a textbook divergence. Textbook divergence. Look at this right here. I mean, the low, there was a tradeometer on the first stage, and I walked you through this. I said, this is probably going to turn into a bearish flag, and we're going to drop down, and we're going to form a divergence. And sure enough, that's what we did. We had a nice divergence. The 20, you see that red line right there? It did not retrace anywhere near that 20. It was a very high angle. The low took out the previous low, and that move gave you. Someone just called me, but I'm turning off my ringer now. Abandoned ship. All right, so that was an intense move off of that. And then we came right up here, and I said, you know what? There's a tradeometer right there. You got to watch it. Paul took that trade. He took that short right there. He came in. He said, boom, out, plus 2 points. That gave you 6 points, basically. And that was a 6-point move off of that tradeometer. So, and that was that a divergence? Well, it was a tradeometer, and we count that as a high HPS type of setup. I like to always have a tradeometer with another indicator. I consider the tradeometer as an indicator in itself, meaning if you're one of the 5 indicators, if you're on a trend line, moving average, support and resistance, or showing a reversal candle in a recognizable pattern, and a tradeometer is like a bonus, and that could be a wild card. If you get a tradeometer setup, that takes into effect a bunch of other things that are happening, different multiple time frames. So it's a great indicator, but it can be, it can blow through. There's things out there that will, this is a great indicator, but it has to be combined with other things, and you can't just, you got to work around. You have to use it as a tool, part of the whole process. Now look at this. We established a big trend line here. And at this point in the market, we had a divergence. We had a tradeometer. We pulled back. I said, watch it. Be careful on this. If we had a positive candle, then I would look to go long. I think we got distracted on another trade or something. This ended up popping, and I put that trend line underneath us right away. Pushed up here. It looked like a pretty decent double top, if I mentioned it, a closing double top where we kind of had a little candle push higher when we came down and we closed at that candle, so we're all in line there. And there's a pretty decent angle to the recent high, the lower low. So that would qualify as a divergence. And from that point on, a big move down. Now, I don't know what I'm trying to measure out here. I think this was a flag setup. Yeah, this is what we were measuring out. I measured out what was called a 2020 flag here. And I remember doing this. So we started to get this little downward trend. We popped back up to the 20-period moving average. And we rotated back up, but we stayed down here. That's why I had the blue line. Hence, a breakdown. Our second low, lots of times a flag will lead to a divergence. Our second low, not really let me see where this line lines up. I don't know if I would have considered that a divergence there. I don't know. 230, I bet you it was a tradeometer setup, though, if I go back. If I can go that far back, 230. I don't think I can go back that far. Oh, yeah, I can. Yeah, I can't tell. All right, well, that was a bear flag. And again, remember, we're working off the 1 minute time frame, and each one of these setups is based off of that first rotation. That's where you lock in the majority of your profits. You can apply this method across different time frames, 3 minute, 5 minute. It gives you more time to stay in. That's why you should always check this lower stochastic band here. It really represents that 5 minute. And if you're set up with a good setup and you have the 5 minutes starting to rotate up, you have a better chance for a big extended move. If that's pushing up versus this way pushing down, you have a big extended move pushing down. So if you have a good setup, a divergence, and this is down here, just starting to move back up, well, then, you have a reason to hold on. Hey, G-Man. Hey, Sniper Sam. Sorry I didn't get to you before. The operation on the eye was a good operation. And it was a good operation. Sound like the good doctor. And it's just recovering day by day. It's still sore. I have a black eye. But it's getting better each day. Still sore though. They had to cut the cornea, I think. All right, so we're back again to the next level, and we're coming to the end of the day. So every single HPS setup that I could define pretty much worked out. Except there was one in the beginning of the day that it was a buy program that kind of ran it over, but eventually came back to it. So we continue on, and we had this recent. Let's see what we have here. We have a nice downward move down. Typically, when we start to see a move down, pretty aggressive. You start to see some trend lines start to develop. I'll throw those in. I'll see what we could just build on this. I didn't do this at the end of the day, but this is something I think could be done just to keep you honest. The came down to the VWAP. The VWAP is probably getting up there as one of my number one, indicators to have on the screen other than the stochastics. It's just better than the moving averages. It is. It really is. The came right into the close, and we closed on the lows basically. Well, not on the lows, but we did sell off into the close. And this is after Saudi Arabia announcement and stuff. So I said I want to follow up on this and see exactly what's going on. And I tried to listen in, but I didn't really catch any new news. And now we can see where the market's headed. The market here slowly grinding higher. The news kind of takes it out of our hands when the big moves, the big bias in the market. But individual stocks is where we, I think we specialize in. And then each one of these HPS setups, that we go back and we look at that 1 minute time frame, you don't have to take the futures here, an ES contract. You could use this on the NASDAQ and take the NASDAQ. It's much less stressful in some ways. So you could take the NQ futures or the YM futures. Plus the tradeometer works for all those. You could apply the techniques to individual stocks, but what I recommend is trading SPY calls off of these HPS divergence, like something like so good like this. You get in here with in the weekly, in the money SPY calls that are trading whatever under $1, and you get a nice move like this. You could get 20-30 cents and make 30% on your trade on a move like this. Easy every day. You just have to have your tools in front of you. Know what you're going to do. So think about it. If you want to take advantage of these setups, you have different ways of doing it. You have the regular futures, you have options on the ETFs, you have the ETFs. You could just, any way you want to do it, whatever combinations, it's definitely doable. And like I said, I'd rather, make 30% on a lower risk and investment instead of ponying up, $270 a share of the SPY stock. You just have to use what's available out there. But it works when it comes to an HPS zone. Now, again, sometimes you will get defeated on news, but most of the time, divergence, flag, divergence, flag. If we looked at something else, I would say the next thing I like is trendline retracements. So when we have an established trend line like here, came through it, we chopped around, it still looked pretty good. We came back down to it, and we had our first touch here, and then we had our second touch. That combined with the divergence, combined with everything else, that was go time. That was go time right there. That's, the ultimate is when you have everything lining up. A divergence plus a trend line, maybe a reversal candle in it. All right, and again, and then here was another retracement. This would have been a great short. I passed on this. I didn't. I noticed it afterwards. But we had this trend line, and we discussed it before it actually happened. Where I said, typically we short into the retracement of this trend line. And it didn't really get up there, but we did have a little bear flag, and it did break through. But then we came up to the trend line, and then massive failure. Massive. All hell broke loose. 30 points. Overnight trade here in effect. What can we do overnight? Hey, we're here. If we have an HPS setup, the volume is okay. It's not that great, but there's a little better. It's more of an interesting trend that's happening. It seems a little stronger. I mean, considering the lows are around 46, it's at 56. That's a 10-point move after hours. That's pretty good. So I remember, so I was working on stochastic oscillators, and I was noticing certain pivots, but I wanted to capture the bigger moves. So instead of going out to a 5-minute time frame, I loved my 1-minute time frame, but I wanted to see the bigger moves. So I'd manually adjust these and keep on going up until the stochastics here rotated down and started to come into a level like, an all line up. So it was the 14, it was the 40. Then I started working with the different time frames too, and the 60 came up, the 60-10. And you know what, the 60-10, the moving average applied to the 60. When I came up with it, it worked, and it continues to work. I'm not going to give you the reason, why did I pick 10? I picked it because I was adjusting this. These were 2 adjustable controls. The full stochastics gives you 3 parameters, and you can adjust them all. So you can say 59 period with a 10 moving average or a 5 moving average. And when I saw some great pivots in the market, I would just tune this down until it automatically came down into an oversold and bounced right where the stock came down. So that eventually, taking notes and back tests and doing all the statistical work on it, I realized that the 60-10 was my best best thing. So it was really about the fast time frame, the medium time frame, and the slow time frame. Fast, slow. But then I put the 9 and 14 on there because sometimes you get a good divergence on the 9, sometimes you get it on the 14. If you get them on both, that's important to know too. But what I found, you know, and we're always learning, you know, but what I've really noticed that the holy grail of all holy grails is that 60-minute divergence, because it gives you the time frame. I haven't seen one that really failed. I really haven't. You know, maybe they don't show up as much as we'd like to see them. Maybe they show up once a month. But when they do show up, they usually are very long. When you know they're meant to move here, and you know I'm not going to go back and look at the ones I've identified. But every time we identify them, they're probably at the bottom of a big move, most likely. So I keep it on the screen a lot just for that divergence now alone. I look for on the 60 period. Now you notice that my stochastics only have one line. You have a percentage K line and a percentage D line. And the percentage D line is the smoothed. It's the line that after a moving average has been applied to the percentage K line, so it actually gives you that smoother, and that's what the one I use because I want that smoother line. So I don't even need these crossovers. Like if I go over it, you see two lines. You see those? You see how volatile that is? Where you see these lines where my mouse is? See how volatile it crosses up, down, all around. Very, you know, you don't want to be, you know, kind of it drive me crazy watching this, trying to time those. So you only need a really good, steady, smooth divergence, and to identify the, you know, using the divergence criteria, which it has to be pretty strict, because the stricter it is, the better it performs. And then the next thing is just having a, you know, as Alec Baldwin said in Glenn Ross, you have to have a nice set of brass balls to take the trade. You know, because it's still trading. You know, there's always that chance of, you know, you always have that doubt. Like, what makes this right? What makes it? There's a hidden something here that makes it right, and it works, but I'm missing that why. And I'm sure everyone else is, and that's what causes you to, you pull back. There's always doubt. Doubt is the worst thing. So, you know, I love the 60. I've come to think that this is more of an important indicator overall because the embedded stochastic on this is easy to identify if it holds above 80. Seeing the rotations here, when we have fast rotation, that's holding above 80. You know, the chance of a rotation back up is good, always better. You know, even if you were jonesing for a trade here, you might have been able to get in on this rotation right here. Right here is where that rotation, wherever that is, I can't get that screen up here. So it should give me like an X. Oh, you know why? Because I don't have it on crosshairs. All right, so still don't have it. There it is. So basically, right there, a little pullback. We got oversold and we held at 80. I mean, even there it did prove right. That's a 2020 trade, but on a very light volume overnight trade. I mean, that's like I said, if you're jonesing for a trade and you need the action, man. I need some action. Then, you know, maybe take it. Dude, I need some action, man. I'm jonesing here. I got that monkey on my back. All right, time for a tune. A little. All right, so I'm back here recording the rest of the thing. We were discussing, you know, the setups for the day, and we're going back here looking at this one divergence that happened here, and this was really the best divergence. Happened about 12 to 12:10. Perfect divergence. You could see it there. You know, put it up, cut it out, take a picture of it, and put it up on your wall. Stock charts. All right. So I wanted to break this down and actually just show what the return would be on the options if you took an options trade there. Which, so right now I'm going to look at the option trade and kind of just give you my fast criteria on what I look at if you're going to just trade. You want to trade something that's you're counting on this as a day trade, so you're going to be in and out. So you're not worried about a long-term hold on this. So closest to expiration is usually good. If you want to give yourselves a couple extra days and go to, just go out a couple days. SPYs here, I think, like expire every couple days for Wednesdays, Fridays. I think Mondays too. Mondays also. So, you always have a couple days. You could always go out a little. You won't get too much. You won't get banged too much on the premium. So that's what I like to do. So again, considering today is, it usually expires today. This one expired today. This one has 2 days remaining. So if you really like the setup, why not? You can go for it, as long as it's in the money and good. So at that point, the SPY was at right around 275. So you can take a look at the 275s. All right, so let's take a look at the 275s. I want to put them up here. All right, so at that point, 275s, they were trading about $2.20 a contract. $2.20 a contract. It cost you $220 for one contract. All right, so that's not, you're not putting up a lot. But say just for argument's sake, you got 2 contracts, so you're pretty much investing $500. Give or take, not exactly, but we'll round it up to $500. For shits and giggles, I like to say, we just have a perfect trade on it. But because it's a divergence, we could look at different levels of how far we're going on this. So right now I'm using my measurement tool here to tell me how far I moved from that low to the first high. And I'm using those options. They were up 32 cents, which would be that would be a 14% move. So that's a 14% move on the options. If you bought them here if you just say you got them here, down here somewhere at 220, call it 220. You're in here, and then you go higher, and you got out pretty good at the top here. It went up to, I can't even see it. My eyes, 237, I believe. My eyes are hurting. 237 for a 35% move. 35% move. Now that's not even. Now say you're on top of it. You're on the 5 minute. You say you're going to take this even higher. You go up to the next level, and you're up 53% on your money. 53%. $1.45. Well, that's $1.45. Who makes 50% on their money off of a nice HPS setup? That's a nice looking trade, but I would only take that trade on a great divergence like that. And that's not even the high of the day or a high of the move. I mean, just say you were a genius and you got out at the top. That was a point. What is that? Wait a second. Oh, I'm on the wrong side here. Give or take a couple pennies. That was a 36% move. That was 36. All right, so I think that might have been the high. But you know what? It's 80 cents. I must have been looking at this over here. $30 to 40% on a trade off of a divergence using options. Slow moving, not too much danger. If it's in your favor, you're going to get the move. Now, you could even experiment and go out in different time frames. Maybe better return on one that has a little bit more premium added to it. It's not. I'm not going to say I'm the option expert of which ones to pick, but it's definitely a good way of profiting off of a good setup in the markets. The same thing to the downside. If you actually, I like this area up here. If we took this short up here, that was at 1450. That's 250. 250. I want to try it out anyway. Here's 250. 250 right up here. So I'm going to look at the option chain again. And let's take a look here. And let's go out to just puts. So I don't get confused. Puts only. And at the time we're trading at 276.87. So I want to take the 277s if I have them available. Now it's way away from that, so I have to. All right, 277s. So it was up there, 277s, and here they are. All right, so that's going out. Expires today. Well, that expired today. So say we were doing it on the day. It's even more interesting. Right on the lows. If you got the whole move, I'm just looking at the relative move in here. That was a. You gotta be kidding me. So at 3 o'clock, this was trading about 58 cents. 58 cents. If you thought we could sell off at the end of the day, take it off before that, you could probably have wrangled in about 260% on your money off of that retracement, off of that trend line. Now that's pretty good. All right, so that's going to finish that little segment. But this segment will continue on, maybe once, twice a week, just to look back at the market, talking about the HPS setups that you could have taken. It's very important to look back and do that homework. And I'm going to help you do that homework. That was the first edition to a walk back of the market day. I'm going to come up with an official name. If you want to suggest one, then I'll give you credit if I like it. But I also want to promote, I think this is a great video and just talking about these levels. So if you make it to the video, I have a special little link here. I'll put it in the description and enable you to sign up for a free trial as a member. No credit card required. Paul will put you on a trial basis and let you check out the site. Typically it's a 7-day, but depending on when you sign up, we usually give you a few extra days. So it's definitely worth checking out and get involved with all our traders in the room. So take advantage of that. Look in the description for the link. It's benefits.daytradingradio.com/open house. All right, benefits.daytradingradio.com/open house. But again, I'll put the link in the thing. So hope to see you in the markets, and we'll catch you on the next video.